Common stocks versus preferred stocks. Whether you are buying stock from a company or you are the owner of a company and you are going to sell your stocks for the first time, you need to know about the differences between common and preferred stocks. Now, first of all, what even is a stock? A stock is a part ownership in a company. If you are buying the stock of a company, you will be a part owner of that said company. If the company goes bankrupt, you will have some claims on the assets of that company. More details about that later. The main reason behind why a company decides to sell its stock in the market is raising capital. The stock is worth some amount of money and the company sells the stock and gets the money. They can do anything they want with the money they get from selling their stocks. I go on with the details on the process of the initial public offering in a different video. You can check that out if you want to. And now, before I continue with the details on the differences between the common stock and preferred stocks, I need to remind you to subscribe to this channel. The names themselves give us some ideas as to what they are. The preferred stocks will have more preference over the common stocks. What is that preference? Well, previously I said that when a company goes bankrupt, the shareholders have some claims over the assets of the company. In this case, the preferred stockholders will have the priority. But does that mean the preferred stockholders are the first in line over there? No. If a company does go bankrupt, preferred stockholders have higher priority than the common stockholders. But bondholders come before them, and the creditors go even before the bondholders. First, the people that have loaned some amount of money to the company, then bondholders. Bonds are a type of loans as well. Then preferred stockholders. And lastly, if there are any assets left, the common stockholders will get it. Let's talk about the dividends. Dividend is the amount of money the company is going to pay its stockholders. It is different for common and preferred stockholders. Preferred stockholders will get a steady dividend payment, a fixed amount of money every single period. The period can be a month, a quarter, or a year. Preferred stockholders are going to get the steady dividends. Not the same case for common stockholders. Not to say that they are never going to get any dividends. If the company is going through a profitable run, the board of directors can decide to pay dividends to the common stockholders as well. But that decision will come from the board of directors. The preferred stockholders will always get a steady dividend. And if the company somehow fails to pay the dividend to preferred stockholders in any given period, they are obligated to pay them back as soon as they can. So, everything I said so far makes the preferred stock sound better than common stocks. But one drawback of preferred stock is that the preferred stockholders will not have any voting rights in the company management system. Common stockholders, on the other hand, do have voting rights in the company. They have a say in the management decisions of the company. That is the main difference between common and preferred stocks. Now, if you are the owner of a company and you are on your way to sell your stocks, now you know what obligations you will have after someone buys your stocks. So, if you don't want the obligation of paying steady dividends, you can sell common stocks. But if your main worry is outsiders having a say in your management decisions, then you can sell preferred stocks. It is totally up to you. Now that is all I'm going to talk about the differences between preferred versus common stock. You can like, share, subscribe, comment and everything else. You can also support me directly on Patreon. If not, that's fine. Liking and sharing is also another way of supporting the channel out. Even watching one more video put up by me is a way of supporting this channel. Now, a small bonus section for the people that did not click off as soon as I started talking about liking and sharing. The bonus is just a small reminder of what a bond is. When you buy a bond issued by a company, you are officially giving a loan to the company, a small loan, and you're not going to be a part owner of the company. Companies as well as governments can issue a bond. If you want to know a little more about bonds, I have a video titled Bonds versus Debentures. You can check that out. And this is the official end of this video. Thank you so much for watching if you are still watching. And lastly, I really hope you have learned something new today. Goodbye for now.